All right, we're back at it. Another week, another What the F happened. Joined here with Mr. Snaggy himself, signing in from Florida. Boy, I don't even know where to start with today. There's so much stuff going on, but we can hit just the bare basics. The U.S. and Ukraine seem to have some type of an agreement that they've come to agree on. So we're going to hit on that. We're going to talk about Bitcoin, what's going on there. What are the tops? What are the bottoms? Where's the support? Where do we see it going? We're going to hit the markets today. We're not only going to hit on all those, we're going to talk about real estate, and we're going to talk about what no one wants to talk about. No one wants to think about: another bubble, a real estate bubble. The risky drivers are back at it, and the risky drivers are all too prevalent right now in how they're lending, and it's the exact same thing that led to the Great Recession. Are we headed there? Are we headed to the next recession? Are we headed to a Great Depression? Well, we're going to hit on that too, because we're going to talk about how stocks are overvalued, more overvalued than 1929. Stephen, what other topics do you got? Because we got so much stuff today.
Yeah. We're going to get into all of it, man. I mean, Trump's been being Trump. A lot going on with Doge, a lot going on with Elon, a lot of controversy over the weekend with the mandatory email with 5 bullet points must be responded to, and just the markets are kind of chugging along. Bitcoin's down a little bit right now. We can talk a little bit about what's going on with crypto, and of course, Warren Buffett has amassed more cash than most people will ever even fathom in their lifetime. So, a lot to cover today for sure.
Absolutely. So we're going to get into all that. Thanks for joining us for this week's What the F. See you in a second. All right. Welcome back, everybody. Thanks so much for joining us. We are streaming live on Facebook, on YouTube, and good old-fashioned Instagram. On today's episode of WTF, What the F, what we're going to do is we're going to rant. We're going to do a lot of ranting about what's going on in the markets and the economy. We're also going to rave about some of the things happening, maybe even tariffs. We're going to hit on that. And we're also probably going to argue. That seems to be a rare but common theme going on here in WTF. But there's so much information. We just got to pick a place to start. So let's start with tariffs. Let's talk again about tariffs, because this is kind of a big thing. And, you know, the most recent development on the tariff front is we all know Trump is going to put tariffs on a whole bunch of things. But he paused the tariffs on Mexico and Canada. Well, those pauses they're no longer being paused. And what I did is I went in here and I looked at this, and I did some studying, some white paper studying, and I looked at what other periods of time in history have U.S. tariffs really kind of made an impact. And I went back here and all the way to the 1800s, and it just shows how tariffs were used a lot way back in the day, but not so much used today. Hence the U.S. deficits and also the U.S. debt. So why is all this so important? Well, one thing I want to talk about, and this is controversial a little bit, is, are tariffs inflationary? You got one side saying no, you got another side saying yes. And it really depends on how you look at it, because in the news today, and all of you have seen this, I do want to preface how I always talk about tariffs is one of the best ways to look, at least in our time, because I'm 47, and I can remember back in the 80s. I remember when Japan was shipping cars over here to the U.S. left, right, and center. They were literally flooding the market in the U.S. with cars. Gas-efficient cars in a time when gas prices were high, inflation was roaring, a lot of things similar to what just happened in 2022 and 2023. But what they did is they literally put tariffs on cars coming over from Japan. So what did Japan do? Well, I think it's very easy to see exactly what they did. They said, okay, if you're going to tariff our cars coming over from Japan, we're going to build factories in the United States of America. Hence, Toyota and Honda and all the Japanese cars that you see on the roads, which every day you see them, every day you hear about them, they are all built here in the United States of America, which all those cars that are built here create jobs, high-paying jobs. They create a robust economy in the state where that is, because a lot of states are largely driven by automobiles. And I just want to preface one thing that just hit, and this is just one of many. Stephen, you can talk about Saudi Arabia. You can talk about all the other countries who have pledged to make major multi, if not hundred billions of dollars of infrastructure that they're going to build in the United States. Well, a company right here, Eli Lilly, to invest at least $27 billion to build 4 new U.S. manufacturing sites. Is it coincidence? Or is it just that companies will get in line and do what's necessary? So tariffs, what they're going to do is they are absolutely going to make foreign goods more expensive. I mean, that's just what they do. So if you put a tariff on a car, it makes that car more expensive here. It makes U.S. manufacturers or U.S. cars, U.S. manufactured cars like GM and Ford, a lot more affordable. But when you really dive into this and you start looking at that, I have it right here. We're going to look at Mexico and Canada, and then we're going to move on from tariffs. I found this article, and I thought this was really interesting. What do we import from Mexico and Canada? And why is Trump going after them? You know, I know he's going after China and lots of other places, but why specifically Mexico and Canada? Well, let's talk about what is coming over from Mexico. $65.2 billion worth of what? Vehicle parts. So there you have it. Vehicle parts in Mexico. We all know that GM, Ford, and lots of other companies manufacture a lot of cars and parts in Mexico because it was cheaper. So if you now put a 25% tariff on all of those vehicle parts, well, it doesn't make them seem so affordable. So those factories, more than likely, and I can't preface this, I can't predict the future, will move back to the U.S. Okay, what else is coming over from there? Trucks, buses, special purpose vehicles, $50.7 billion. Passenger cars, $42.3 billion. As I mentioned, computers, $25.8 billion, and electrical apparatus, $23.6 billion. All coming over from Mexico. So now Mexico gets a 25% tariff put on whatever he puts it on. That's going to basically level the playing field. I'll just bet, much like Eli Lilly, a lot of those factories come back here. And if they come back here, what does that mean? More jobs, more robust economy, all those things. Now, the only downside is it takes time. But let's move on to Canada. What are the top 5 U.S. goods imported by Canada? Crude oil. You already all know that oil, we get a ton of oil from Canada. How much? $92.5 billion. That's a freaking lot. Now, I know he said that he's not going to tariff oil as heavily as the other things, but what else? Well, in Canada, they're shipping over $33.9 billion worth of passenger cars. They're shipping over $14.1 billion of vehicle parts, and then aluminum and petroleum products. So heavy oil. And then I'm not going to really go into China, but you all know what is every single electrical device that you own? Where is it made? China. So there you go. You figured it out. About 66.7 billion of cell phones and household goods, cheap electrical goods. So when you really look at this data and you really look at what's going on, I could even go further and come over here and just look at the trade policy and what's going on. It's going to level the field. The trade deficits between these countries will narrow, which will be bad for them, but good for us. So I don't want to say you got to pick a side. I mean, it's kind of like the U.S. versus Canada hockey games. It's like, that was fun as hell, wasn't it? But you're going to see that. You're going to see lots of tension, lots of the media just attacking this, saying how bad this is going to be. But is it really going to be bad? In the near term, it's going to be maybe a little bit of a sting, like getting stung by a bee, because it's going to raise the price on some things. But you know what it's going to do? It's going to lower the price on other things. So some things will go up, other things will go down in price. Eventually, it will level it out. But the work and the jobs in the manufacturing and all that infrastructure, guess where it's going to come? Back to the good old United States of America. Stephen, what's your take on tariffs?
No, I call you the king of tariffs, man. You got it dialed in. You're following it. You're tracking it, and everything you say makes a lot of sense. You know, the way I look at it is, who knows what's actually going to happen. You know, Trump seems to be playing this game where he'll dangle something and threaten something and say something, and who knows what his intention is. Is he really planning on implementing? Is he using it as a tool to negotiate? Who knows? So we're just kind of tracking it and following along. But I'm all for all of it, though. I think everything we can to bring stuff back to America, to put America first, I think is good for the country. And I think it's good for the future. So I'm here for all of it, man. I'm excited. And I know, March 4th, Trump just made a big announcement. He's going to address the nation on March 4th. A lot of people are kind of, reading into that a little bit. How far is he going to go with this announcement on March 4th? What's he going to say? What's he going to do? Is it going to completely turn things upside down? So we look at history. March 4th was, I believe, when the Constitution was originally launched or something. I'll pull up the exact details of that in a minute, but there's a lot of historical reference to the March 4th date. So thought that was pretty interesting on top of everything else that's going on right now, especially with all these tariffs.
I love it. Well, folks, just so we kind of stay on time, I know we're with you all for about an hour, but we've got more than an hour's worth of stuff to cover here today. You see, what WTF is going to go through a major facelift. This show is going to be broadcasted officially. We are literally changing up this show. It's not going to change. It's going to be the same show, but it's going to be put out to a lot more people. So this show is about to get wild. We're going to have studio engineers. We're going to be going live the right way. So just like you watch Fox News, tune in every Wednesday morning at 9:30 a.m. Eastern for WTF. Well, let's move on to the next thing. Stephen, let's talk about Ukraine. We all know there's been this big war going on in Ukraine and Russia. It's created a lot of tensions between the U.S. and Russia and other BRICS countries that are also in support of Russia. But one of the things that's interesting that I just read, this just happened this morning, so we haven't really dug deep into it. So if any of you know more about this, please share it. But Ukraine and the U.S. have agreed to a deal on critical rare mineral rights and all sorts of stuff. But here's the deal. The draft deal, and I'm just going to read this, in basically between the two companies, will develop Ukraine's mineral resources, including oil and gas, and sees the U.S. drop demands on its right to $500 billion. $500 billion is a lot of money in potential revenue from the agreement. So essentially, the U.S. stands to literally benefit about $500 billion from this. So, Stephen, what I know this is brand new, literally just came out. We don't have a lot of news on it, and the news that we're getting is from CNBC, which is, we don't really lean too heavily on CNBC anymore, but sounds like they got a deal. But, my question, Stephen, is they got a deal. It's going to be good for the U.S., going to create a lot of new revenue. The U.S. is going to give Ukraine a bunch of resources to mine and do all that stuff for these minerals. But how is that ending the war? It doesn't seem like that's what Vladimir Putin would want. He would want the minerals. So what is your take on this?
Yeah, the whole thing is definitely interesting. I mean, just not that long ago, what was last week, the U.S. delegation flew over to Russia and met with the EU and different people, and Ukraine was not part of those talks. And some people gave the U.S. a little bit of, said that wasn't great because Ukraine wasn't involved in these peace negotiations. But at the end of the day, the U.S. is just trying to make moves, trying to make things happen, trying to, lead the way. And let's try and see what we can do here and see who comes to the table from there. So, this is an ongoing thing. I mean, one of the campaign promises that Trump made was that he would end the Ukraine-Russia war, very quickly. And it looks like he's trying to make moves for that. Now, where the rare earth minerals come into play. I mean, I think it's Bloomberg was actually reporting that there's actually not a lot of rare earth minerals in Ukraine, and a lot of that's not even true. And so there's controversy there, whether this is actually something that's, actually relevant or not. So a lot of just, it's hard to know what's happening right now with all of that. It really is, but it's sad, man. It's a sad war. It's, a lot of millions of people have died, over the last couple of years. And I'd like to see, something brought to that, because it's just not good. It can keep going forever.
Yeah, I think everyone, I think this might be one of the only topics we could get 100% buy-in from all the platforms we're streaming on, is we'd all like to see this war end. I know it's not a war on our soil. I know I shouldn't say we're not involved. I feel like the Biden administration had us pretty freaking involved in it, and it doesn't seem like we're not involved now. But it's just, there's just, lots of families, lots of husbands and wives all dying over there. It's just rough. War is never good. It's very profitable, but it's never good. But, the only thing that I feel like this drives a wedge is, we don't know the details, which is probably by design. You got negotiations going on over there in Russia and with the EU. And then you also have deals going on with Ukraine in the US. And I know one of the things that Vladimir Putin wanted was some of the minerals, and maybe this deal, I don't know. I'm not even going to touch it. We're going to come back and get more on this, but I definitely wanted to point it out because it literally just came out. So Stephen, I'm going to pass this over to you because we got what we do every week. We got a whole team that goes into white papers, searches news, just looks for the facts. And we've got a lot this week. So I want to make sure we go rapid fire before I get into, why is the stock market overvalued more than 1929? I want to talk about what's called the narrow market. I want to explain that. Talk about Bitcoin for a second and just a few other things. But Stephen, what topics do we have in queue that we want to get out there? Because some of these are freaking fire.
Yeah. I mean, just some quick updates kind of for the week, which I like to do. So, Doge and Elon were under fire again over the weekend. Elon sent an email out to all federal employees demanding that by the end of the weekend that they reply to the email with 5 bullet points of what they accomplished last week. And so that created a lot of controversy. People kind of saying, well, Elon's not my boss. Elon's, hey, I'm a surgeon for the VA, and it's a slap in my face that I have to respond to an email about what I actually accomplished last week. And so you got a lot of egos out there. You got a lot of people that, hey, I'm above this kind of thing. But when you take a step back and you look at it from kind of the federal government's point of view, or Elon Musk kind of heading and leading the Doge effort. Of course, Doge is the Department of Government Efficiency, where they're going in and they're using modern technology and coding and different algorithms to kind of dig through data and the federal government and the processes and systems. In past weeks, Chris, we talked about how they could only process 10,000 Social Security retirements a day or a week or whatever it was, because everything's a manual process. All the records are held down in a cave, and they got to send the records up an elevator, and just all the inefficiencies that are out there. And of course, Social Security Administration, they were saying, people that are 300 years old were receiving checks. Well, they weren't receiving checks, but what it was is it really outlined just how antiquated some of the programs that run all this stuff are. I think they were written on like very, very old coding, stuff that I learned in high school. Very just antiquated stuff. So it really highlights how we need to bring everything back to the modern age. But, they sent out this email, hey, please respond back. And, it's kind of a litmus test, like who's looking at their emails, who actually has enough respect to respond to this. And so it created a lot of controversy. And, a couple, like the Department of Defense, basically said, hey, maybe don't respond because there's some classified information, which I get. But, they were wanting, and, at the end of the day, I think they came out yesterday and said 1 million federal employees actually responded, but there's about 3 million federal employees in this country. So 2 million didn't respond, so now they're saying, hey, are these people going to get fired? What's going to go on with that? Like, it's just a simple email, but should it be sent? So that was a whole controversy over the weekend. Another controversy broke out yesterday. In the White House in the White House press room. Basically, the White House came out and said, hey, the White House Correspondents Association is going to be no more. And what the White House Correspondents Association is a group of basically just journalists out of DC that get to make the decisions of who's allowed to ask the president's questions in the White House press briefings. And so if you remember last year, a couple of years ago, there's a lot of controversy in the press room because there was pictures of note cards that Biden had, or Biden's press secretary had, of the different journalists and what the questions were going to be and who they were. So it was like, well, are these journalists actually being journalists, or are they being hand-fed and hand-spooned the questions that they want to ask? So basically, Trump in the White House said, we're going to get rid of those people. We're going to decide who we allow in the room to ask questions. We're going to open it up to podcast hosts and conservative media and alternative media. It's not just going to be the CNNs and APs and Fox News and Bloomberg. We're going to open it and allow, real Americans' voices to be heard and real questions to be asked, which I don't know how people get upset about that. Again, transparency should be a good thing. That's what Doge is doing right now. Doge is exposing a lot of fraud and corruption, but at the end of the day, it's really just transparency, what's actually going on. So, it always steps back. Like, why are you getting mad? Like, what is it that you're getting angry over? Is it because things are different, or are you scared of what's going to get uncovered, or, what is that? And it's really exposing a lot of people and what they're talking about. So, a couple stories right there that came out over the weekend, Chris.
Well, let's go to the audience. I mean, this is a very controversial topic as well, because, a lot of people are the government employees. Government employs 3 million plus people. So I'd be remiss to think that there isn't some people on Instagram or Facebook or YouTube that are government employees. Like, what are your thoughts of this request where you have to send an email in a specific amount of time, just listing the things that you're accomplishing, essentially is what they're saying. Does anyone have anything to say about this? I know we got JMSC 2015 putting some weird, emojis up there. I'm not sure what that's all about.
Yeah, and while they're responding, I have a personal, anecdotal story. My brother-in-law works pretty high up at the VA, and he's obviously been affected by all this. He's been working from home. They allowed him to start working from home about a year ago or so, where he didn't have to go into the VA office any longer. Basically because they were out of space in the VA office here in the Palm Beaches where we are. And so he was working from home. He's now being told that I think in April, he's going to be forced to go back to a new office now. That's a little bit further away. So he's getting affected that way. And then obviously this weekend, he was like, hey, I do so much, like my job, like it just like, I'm very busy all the time. Like, to be questioned about what I do. So he was kind of on that side, and he's a big Trump fan, like a big conservative. And so even he was like, this is kind of BS, but again, it's more ego than anything. Did he respond at the end of the day? Absolutely. He sent a very nice, detailed response of everything he accomplished and, is said and done with. So again, like, if you're going to accept, in my opinion, if you're going to accept dollars from, us, Chris, that's how federal employees are paid, through tax dollars. The government doesn't produce anything. The government has money because of tax dollars. And so, to me, it's like, all right, listen, Chris, if you asked me what I did last week, like I could send you a 15-page email in 2 minutes. Like, we do so much all day, every day, So
I think the general thing is accountability.
What are people saying? Yeah. What are people saying?
They're just saying, it's called accountability. Totally agree. And I love David's comment about the golden Fort Knox. So I just read an article all about that. So we can cover that one. But we got some people saying control. We got some people saying employees are accountable. They haven't been for years. Like, listen, like, I don't think it's out of line to ask employees that are on payroll, like, send me a list of the things you're working on. Send me a list of the things you've accomplished. Like, why is that out of line? And then people get all, their panties in a ruffle because all of a sudden now they gotta be held accountable. Like, why should I have to answer? I work hard, but do you? Or are you just working hard on something you think is important that really isn't at all? Like, there was a lot of stuff that I've seen on social media, and none of it, is confirmed. So I don't want to go deep into it, just about the things that people were working on, the things that government employees were tasked to do. And some of it is so asinine, ridiculous, and not even like logical. So like, I think it's good. I do. I think, giving government employees, some accountability and some just tell us what you're doing. And listen, like the other thing too that I'll hit on is, with all these changes that Doge is going in and doing, people are losing their jobs there's entire agencies being shut down, and maybe it's good. Hopefully the IRS is next on that line. I think all of you on here would be really psyched to hear about that, unless you work for the IRS. But, I think most of us think the less IRS agents out there, the better off. However you look at that, take that for what it's worth. But it's definitely going to be a lot of shakeup. There's going to be a lot of people that are going to be obviously on unemployment because they're going to have to figure out, what is it that I do? And are they even relevant right now? Like, are government employees even able to go out and get another job with what they've been trained to do for the government? I don't have answers for all these questions, and I'm not sitting there saying anything bad about government employees, but like, it's time to wake up and smell the coffee, I guess. That's my take on it.
Yeah.
Seeing what other people are saying here.
I mean, I think everybody realizes, there is a lot of bureaucracy and there's a lot of government waste. And, sometimes to be able to unravel that and start to make changes, you got to almost break things. You got to almost go too far before you can find that balance point. And, we're only, 3 weeks into this administration, a month into this administration. And that's kind of where we're at right now. They're in the process of figuring it out and figuring out that balance point and what that's going to look like moving forward. So it's going to keep up. I mean, it rolls right into this new gold card that Trump is talking about. You see that, Chris?
Yeah. I don't really know enough about it to really say anything intelligent.
Yeah, it's real simple. So just read it real fast. So this is, Trump just keeps coming out with different ideas. And again, whether this stuff is legitimate and he really wants to try and make it happen, or if he's just throwing things out there and seeing what sticks and what people take a liking to. I mean, Trump at the end of the day, he's a populist, Chris. Like, he wants people to like him. He wants to do things that are good for the country. He wants to do the things that are good for Americans. So he threw this idea out, though, over the weekend. He announces a new immigration, quote unquote, gold card that will be sold to immigrants for $5 million. So the gold card is a premium version of a green card and will provide immigrants with a pathway to citizenship. We're going to be selling a gold card. You have a green card. This is a gold card. We're going to be putting a price on that card of about $5 million. And that's going to give you green card privileges. Plus, it's going to be a route to citizenship, and wealthy people will be coming into our country by buying this card. They'll be wealthy and they'll be successful and they'll be spending a lot of money and paying a lot of taxes and employing a lot of people. So I don't know.
All right, so I want to move on to let's see, who David had asked about, is there gold in Fort Knox? So I've been researching this a lot recently, just kind of because it's been it's been a big discussion. I mean, when you're looking at where we're at right now, people, I hope all of you are starting to look at the markets and say, there's some things that don't make sense. The consolidation of the S&P 500 down to literally it's largely consisting of 10 stocks, which are all very much the same industries, tech and AI and all this. And when you really look at it, it's the same thing that happened in the roaring 20s. You had the markets consolidate down. Everybody was putting the money in the same stocks. You got that same thing happening. And Warren Buffett sitting there saying, piss on this shit. I'm pulling my money out. I don't know what his number is now, but it's more than $325 billion in cash. Now, we're going to cover that in a second, so I don't want to go down a rabbit hole. But just so you all know, study Warren Buffett. Read his books. Look up anything about Warren Buffett. And what you will find is that dude does not like cash. He doesn't sit in cash. That's not his thing. That's not Berkshire Hathaway's thing. They are not a cash company unless he sees an opportunity down the line, which is exactly what he sees. And we're going to dive deep into this, but real quick, let's just hit on gold. Here's an article, and I'm going to share it about gold. Now, it is definitely kind of one of those things where you got to kind of look at it and say, how much gold does the U.S. have? Well, right here, 8,133 metric tons. But how much of that? Here's my question to David. David said, is there gold in Fort Knox? Or yes, I would say yes, there absolutely is gold. But it's not whether there's gold in Fort Knox that I think is the right question. I think the question should be, how much of our gold have we leased out? How much of that gold is pledged somewhere else? And when you look at, like, who are we competing with on the gold front, the U.S. versus gold. And you guys can kind of look at this. It's just an article that talks about diversification is key. And I always say the same thing Jim Rickards says, the same thing Ray Dalio says, the same thing Harry Dent says is, everybody should probably have roughly 10% of their portfolio in precious metals, gold and maybe silver. Silver's a little more volatile than gold right now, but it's better priced. I don't know where silver's at today. I don't know what spot is, but $33-$34, somewhere in that range. It's in my opinion, a bargain to buy silver. It's just a very volatile position compared to gold. So when you're looking at diversifying, you can look at it, and the price of gold is very high. I don't like to buy high. So I'm going to stop that screen share. But, when you're really looking at your portfolio, gold should probably be a piece of it. And Fort Knox more than likely does have gold, but do we have enough? It's kind of almost a race with all these countries. India, Russia is sitting pretty with gold, just so you all know. If you compare sizes of the economy in relation to the percentage of gold that they hold, Russia's number one. Russia has more gold than the U.S. if you compared economies, okay? But not more if you just say, well, U.S. has 8,000 some, cubic tons or whatever I just said. what did I just say? Yeah, metric tons. Sorry, get it right. Metric tons. So we have the most gold, but not in relation to the size of our economy, which is, I think, how you can measure that. But yeah, that would be how I'd put that. Nathan said it's data that China and Russia would love to get their hands on. Why on earth should we want to put classified national security info into an unsecured email to someone that isn't even in the chain? So I would agree with Nathan, and you said the same thing, Stephen. Classified information should never be shared in email. And if the, but to Nathan, like, you could generalize something. Hey, we're working on top secret stuff regarding X, Y, and Z. I mean, I agree you can't share like classified national security information on an open email, but you could at least say, hey, we're working on this top secret thing. You could do something. So I think that's just no disrespect, Nathan, but that's just an excuse. It's just an excuse. The accountability still needs to be there, and they need to basically say what they're doing. Just skip that. Let's see. There's a lot of comments came in on that. Stephen, read the comments. I'm gonna take us down another rabbit hole because now we're talking about gold. I got another article here that came in, and this is a bearish signal. So all these white papers that I subscribe to and we subscribe to here at Money School BYOB, all they do is give us an inside look, an economist look. And I can give them to you, like Harry Dent's one. There's another one called Unbounded Wealth that we do. I've got another one, which is a hedge fund manager over in, I can't even remember where he lives, somewhere over in Europe. Then this one is Harry Dent. So you get all these different economists and these hedge fund managers. They all have these white papers. Yes, they're all subscription. It's $10 a month or $20 a month. So it gets costly. But what it does is it allows you to look across a wide array of economists and traders and hedge fund managers and get a broad-based view, a macro view, and sometimes a micro view of what's really going on. And I will tell you this, every single one of them right now is bearish on the economy, which means they think the economy is going to go down, and very, very bearish on the markets. Don't take this wrong, anybody, and I'm not going to call anybody out, but they call it dumb money or stupid money. The only money going into the stock market right now is dumb, stupid money. And who is dumb, stupid money? Retail investors. The folks that you see at work, the folks you see out at the grocery store, that's dumb money. Smart money, the Warren Buffetts, the institutions, the Berkshires, like all the big institutions, they're getting out. Now, you might not hear about that. You won't see that in the news. The only way you're going to get a real view of that is get inside. Get inside and hear what they're doing. So on that right here, this is a bearish signal from one of the economists. It said, finally, Bitcoin breaks strongly through the 92,000 down to 88,000 yesterday. Now, this is a bit dated. This is 2025, or actually this is yesterday, 89,000 plus today. The bounce could easily go back to the 92,000 previous support. This further confirms a major market top. So if you understand Bitcoin and how it's directly correlated to the markets, you would understand what that means. Is economists and traders are trying to figure out, what is the top? Are we going to break the resistance? Are we going to go higher than where we're at now? And what they've been tracking is just the movement of Bitcoin and the general indexes in the market, the S&P 500, Dow, NASDAQ, and they're looking at it, and the markets can't break higher right now. There isn't enough juice in the economy. There isn't enough juice in the markets. And even with retail dumb money, there's not enough to break through to new highs. So really what he's saying is this is confirming a major top. And he's saying the next major support, this is for Bitcoin. I want to go back. This is Bitcoin. The next major support is right around 71 to 73,000. So in other words, in conclusion, if you don't understand what I'm saying, he's basically saying that we've confirmed Bitcoin has reached its top. That's our good, top level. And we're more than likely, the chances are it's going to break down, okay? And it's going to go down to 71 to 73,000, which would be a 34% drop in value. So if you own Bitcoin and you bought it at or around its top, right? About 92 to 88,000, somewhere around there, you're looking at potentially a 34% drop in value. That's the reality of it. But then he goes on to talk about he talks about stocks and how stocks are following Bitcoin or Bitcoin's following stocks. And he's talking about the NASDAQ. So the NASDAQ, which is one really to watch because it's a lot of the tech companies out there, and the NASDAQ's down 4.6, but the next major target down for the NASDAQ, this is scary. But then if any of you know how fast the NASDAQ has gone up, me and Stephen talk about this a lot. The NASDAQ has shot up more than any of the other indexes, okay? So the next stop down on the NASDAQ, brace yourself, is 20%. That's the next fall. That's the only place it can stop because it was such a free ride up. It's going to be a free ride down, but it goes down faster than it goes up. So he says, now is the time. This is an economist saying now is the time. If you haven't gotten strongly defensive, as they've been talking about, get defensive. And he talks about gold. He talks about treasury bonds. And he's not the only one. Ray Dalio. Okay, maybe one of the smartest minds on top of Warren Buffett in the modern day world of investing. I mean, he ran Bridgewater Capital, which is the largest hedge fund in the world, manages countries' money, not just individuals and wealthy families, countries' money. And they're all very similar when you look at their allocations to their portfolios, largely in bonds. Treasury bonds are leading the pack because they've never, ever not paid on them. So they are effectively guaranteed by the full faith and credit of the U.S. government. So essentially that's what he's saying. And then he goes on to say, start the shift, get out of the markets is essentially what he's saying. And he's saying, the next major stock crash could be 40 to 50% in 2025 and is likely to hit in 2025. So he is firmly confirming that he thinks we are going to see that big of a drop in 2025, which that's one of the first times I've heard that economist actually kind of give a timeline. He's usually general in how he's talking, but now he's saying 2025 looks like when this is going to happen. Stephen, what's your take on that?
Yeah, man, it just seems inevitable at this point.
And I'm reading some of these comments over here. It looks like some people they like the IRS. Other people are like, nope. The IRS is no longer needed, and eventually the collection of taxes at a federal level is not how our country was originally founded. Yeah. Does anyone know that prior to 1913, there was an income tax? Let that sink in. And prior to 1913, you know what else there was not? The Fed. And we didn't do too bad without the Fed and the IRS, but we relied on other income sources. And some would say the markets and the economy were better off for it. The Fed has done a really good job of literally destroying the value of our dollar. It has done a fantastic job. And you all know the Fed is not owned by the government. It is a private institution. I'd have to say Satan sits somewhere on the board, but nobody really knows who it is. And then we've got Ethan said, let's see, if you're privileged enough to handle Secret Service or TS information, that's a no-brainer. Generalize it. Exactly what I said. Thank you, Ethan. That's kind of the point I was trying to make. And then he said, Mr. Stinky says, let's keep this AI bubble going, baby. Listen, AI's got legs. I mean, there's no question about it. I like that, Mr. Stinky. I like Mr. Stinky's name. Everybody agree? Like that's an interesting one, right? Your YouTube handle is Mr. Stinky. I'm not even going to ask, but we'll just leave that alone. But Mr. Stinky wants to keep the AI bubble going. But unfortunately, when it comes to the markets, Mr. Stinky, all boats go out with the tide. So when the tide goes out, which has already happened and the economy is already showing weaknesses, Warren Buffett sees something, obviously, most of us don't, or some of us do and most don't. And that is there's something coming up. And then Eve just says, fuck the IRS. Well said, Eve. Well
$334 billion of cash sitting is a lot of cash, man. Pretty wild.
Yes.
So I got some breaking news real fast, Chris, before
Let's
we
hit
move on. Just real fast. So what is your opinion of the Washington Post?
I think it's a piece of shit, but that's just my opinion.
So the Washington Post, a lot of people know, is owned by Jeff Bezos, who also owns Amazon, and seems it's been a pretty left-wing publication over the last several years. Would you agree? So what appears to be a pretty major shift, I'm just going to actually read this because Jeff Bezos literally just posted this on X a half hour ago. So Jeff Bezos comes out this morning. I shared this note with the Washington Post this morning. I'm ready to let you know about a change coming to our opinion pages. We are going to be writing every day in support and defense of two pillars: personal liberties and free markets. Now, Chris, I'm not a political science major or expert by any means, but personal liberties and free markets are typically a pretty conservative.
100%, no pretty about it. 100% conservative.
So this seems to be a pretty major shift here. So we'll cover other topics too, of course, but viewpoints opposing those pillars will be left to be published by others. There was a time when a newspaper, especially one that was a local monopoly, might have seen it as a service to bring to the reader's doorstep every morning a broad-based opinion section that sought to cover all views. Today, the internet does that job. I am of America and for America and proud to be so. Our country did not get here by being typical, and a big part of America's success has been freedom in the economic realm and everywhere else. Couldn't agree more. Freedom is ethical. It minimizes coercion, and practical. It drives creativity, invention, and prosperity. Amen.
All right, enough. If are any of you just smelling bullshit? Like, this is Jeff Bezos, folks. Let's not forget what happened the prior 4 years and a couple of months. Let's not forget that, okay? Because now all of a sudden, all these puppets, because that's the only word for him. I don't care how wealthy he is, how wealthy, all of these jokers are. They're fucking puppets. That's all they are. Because as soon as the wind changes, they're jumping on the other side. It's just like it's just the popularity contest. It's just like, oh, well, hey, let's just jump over here. That's the popular kid today. And listen, Trump administration now, is running the country, and now all of a sudden they're just changing their tune. I don't like people like that, Stephen. That's just all I have to say. I don't know if it's a New York thing in me. I like people that are real. I like people that stand by their opinions, stand by how they view things. And listen, like that was hard. The last 4 years was very hard on my wife, and I, because listen, we just stood by just like you did. Like, we didn't sit there and get in a crowd of people or go to dinner with somebody that, they're liberals, and all of a sudden they want to talk liberal and Biden administration's in. So we just bend, oh yeah, Biden's doing good. Screw that. Biden did a terrible job. And I would say that to them, and they'd probably ask me to leave dinner. I have family members that are incredibly liberal, and I didn't ever hold back. I'm not trying to be an asshole, but I'm not going to sit there and listen to this shit and not voice my opinion. It just is like, you got to just have that. What do you call that anyway? What is that called? Like in somebody where they don't just bend to what somebody else's will is. They don't just follow. Don't they call that conformity? I don't conform. Screw it. And none of you should either. But this asshole in Mark Zuckerberg, all they are is conformers. Just conform to what popular opinion is. It's sick. Anyway,
yeah, maybe, or they had something on them, blackmail. Who knows? I mean, the guy runs.
Oh, I'm sure that has a lot to do with it.
One of the largest businesses and companies in the world, and Amazon. And when you have that much power and control and that much riding, sometimes maybe you do got to play that game, Chris. I don't know, but to me, I'll give him the benefit of the doubt. I'll see what happens here. We'll see if his tune changes for the long term, or like you're saying, if in a couple of years and if down the road, whatever, it swings back, then agree with you 100%. But, I also like believing that people can understand they were wrong. Maybe he did have a real change of heart. So we'll see the direction this goes, but fired his opinion. We'll see what happens, but pretty major news though. Cause that's a major shakeup in the country's legacy media publications.
Yeah, well, I think they're probably. I mean, I wouldn't be surprised if you start seeing that with CNN. I not long ago, I believe Elon was talking about wanting to buy CNN. So I can't imagine they're doing all so well. Especially when all this stuff happens. Like these media stations, they all survive on ads, right? On paid media. Like, are you going to survive if all you do is just talk left? Like, I can't see it happening. But nonetheless, let's move on.
Yeah, and there's been a lot of layoffs. I mean, Joy Reid just lost her show on MSNBC. There's been, and that was one of the bigger ones. There's been a ton of different layoffs. A lot of the organizations are laying off a lot of people right now. So it's definitely happening.
So I'm going to hit on two things, Stephen. I got three major topics that I need to hit, and I know there's a bunch of other stuff. So I'm going to go fast. Is that okay, everybody? Do you mind if I go fast? And actually, before I get into these three major topics that I want to hit on. I want to remind every single one of you that coming up here in May, we've got an epic event. We've been doing this event for a couple of years. It's called Private Money Club's Money Tank, and we've changed up what we're going to be doing. We're literally going to, so if all of you like the stuff we're talking about here, but you're like, oh, I wish I could learn more, we got a lot of places for you to learn more. Wealth Web or we got WTF, we've got Wealth Webinar, we got Ask Me Anything Happy Hour, we got MSTV, which is effectively Money School TV. It's kind of like our TV station, if you will, where we do lots of stuff in there. A lot of our team does webinars on there on very unique topics. So if you want to get into MSTV, it's $19 a month or $190 a year. We're going to be doing tons of stuff in there. So that's the inside track. But another inside track where you actually get to meet with all of us. I will be there. Stephen will be there. Shauna, the whole Get Along gang. We are all there. We bring in some of our best relationships, come in and talk everything from tax efficiencies, from oil investments and how that plays into your portfolio. We've got all sorts of topics, but that event is going to be happening in Dallas, Texas. Now, why is that so important? Well, I just got back from Dallas last week, and here's what I can tell you. Texas is just freaking awesome. Number one, no matter where you want to be, it's close to the airport. So you fly into Dallas, which is a pretty easy place to get to from just about anywhere in the country. I don't care if you're in Florida, Buffalo, mid-state, California. It's not a difficult flight. So it's a very great from a logistics standpoint, but also it's just a freaking cool state. It's just a really cool place. And that's where we're going to be doing the events. We've got VIP tickets available and general admission tickets. And also you can just join us virtually if you don't want to get on a plane, because I know a bunch of planes have been crashing lately. I get it. I'm on a plane all the time, and there's not a second I don't think about that when the plane's taking off and landing. I'm like, shit, is this going to be one of those ones that is just going to belly roll on the landing? I don't know, but I get it. But Stephen, do you want to hit on that? Stephen just put an early bird discount ticket in there. So we're putting a plug out there because all of you definitely should make an effort to join it. I know a lot of people are like, oh, I wish I could make it to this one. I wish I could make it to that one. Stop with the nonsense. Be accountable, just like all the government employees, and get your ass to Dallas, or at least get a virtual ticket, because we're going to be going deep at that event. Stephen, anything you want to say about that one?
Yeah, it's going to be a really good event where we changed it up a little bit. If you've been to a Money Tank in the past, we've kind of really gone through all of our programs and what PMC has to offer. We do a lot of networking and have a lot of fun. So the networking and fun is going to be there. What we're doing is we're actually bringing in speakers. This time, though, they're going to go in deeper on topics, deeper on subjects. So instead of hitting things 30, 45 minutes, we're going to go a little bit longer, make sure the value, the education is really, really solid, because we're looking to build, the number one private lending platform in the country. And we're well on our way to doing that right now. We have more private money in this platform than any community I've ever seen. And I've been in real estate investing for 15 years. So we're already killing it. We have incredible people within the community using the platform at privatemoneyclub.com. So we're bringing it all together, Dallas, Texas, May 8th and 9th. The early bird discount, we're not like advertising it, promoting it just for you that are on these live shows. We want to do something special for those of you that log in every single week. So while we offer this early bird discount, take advantage of it. Get your ticket today. Just go to privatemoneyclub.com/money tank. And when you buy your ticket, it's early bird 1 for a GA ticket, a general admission ticket, or if you want VIP, which is going to get you a lot more access to Chris. We're going to do a medieval times dinner one of the night. We're going to do a little networking thing another night only for VIP. So if you want a VIP, use early bird 2, all one word, early bird 2 as the discount, and get yourself a nice little discount. And if you miss the discounts, don't worry about it. The full price for the ticket is well worth it as well. We'll have lunch every single day. It's just going to be a lot of fun. It's going to be a great time down in Dallas, Texas. So looking forward to seeing everybody there.
Awesome. I just put it up there on Instagram. Some of you were asking for it, so I just put it there. privatemoneyclub.com/money tank is the link. And then there's the discount code. So I got to roll because we got to get into these. These are deep. Okay. So folks, I want you to really pay attention. If you're doing something, unless you're a government employee writing your email, that's okay. But if you're doing something, just pause for a quick second, because you're going to want to hear this. This is probably some of the best stuff I've seen, and it's scary, but it's important because it literally tells you exactly where we're going. First off, there's a gentleman, and you can look him up on your own time. Stephen, you can type this in. His name is Dr. John Hussman, Hussman. Okay, you can look at him, but all I want to tell you is what he just said. He just said this, and he is probably one of the best realists out there. Very, just listen to this guy. He said, It's the greatest equity overvaluation of all time. Okay. That's where I'm going to start with. And then I'm going to move into this. So this is another economist. These are two different people that are saying things. So right now, this economist is saying stocks are now overvalued as 1929, greater than they were in 1966 or 2000. He's just calling out recessionary periods. So let me just read this right off of this. Investors always get increasingly complacent as stocks keep rising over many years. Now, let me just hit on that. This has been the longest bull run in history. When you talk about complacency, I see it firsthand. People literally don't think that there's a downside to the markets, and that's very dangerous. I argue with people on my YouTube comments because they're just like, oh, just put money in the S&P. These fucking idiots, excuse my language, they don't even understand what the S&P is. They don't even understand investing, but that they're the experts now. I've been 21 years doing this, been through multiple recessions, not nearly as many as these economists, but just please listen to this. It says, in fact, we are in an era where bubbles should be expected. The infamous 90-year cycle, and we talked about this a lot in 2022 and 2023, major bubbles formed into 1835, 1929, and now early 2025. These super bubbles come on an average of every 90 years. So the reason this is so important is because this is a once-in-a-lifetime occurrence. Okay, most of us will never see another one of these, and many of you may or may not, because that's a 90-year cycle. And then what he's going into, he's talking about another cycle, which Dalio talks about all the time, which is a 45-year technology innovation cycle. This is where it gets fun. Every other 45-year innovation cycle is bubbly, just as every other 39-year generational cycle brings both a generation that fosters radical innovations. And he goes on to talk about it. The larger booms like Henry Ford's generation with electricity, combustion engines, and telephones. And then the roaring 20s bubble. And then the baby boom generation with microcomputers, iPhones, operating software, and the internet. And then it extends into 1995 through the 2024 bubble. So you can almost go back in most of your lives and you can look at these different cycles, the innovation cycles, the technology cycles, the generational cycles. We have literally been able to see this transformation. We are on to the next one. But he says in 1929, and we all know, just so everybody realizes, 1929 was right when the Great Depression started, okay? Everything before 1929 was freaking bubbly. It was so good. The markets were contracting. Everybody was making money. Study it. It's a fascinating thing to look at. But it said the 45 and the 39-year cycles were more aligned. They are not right now. The 39-year peaked in late 2007, and the 45-year cycle should have peaked around late 2019. And then what he does is he shows these peaks in a chart. He's basically showing you where we're at right now. We are above the peaks of 1929. We are way above the peak of 1966, and we are above the peak of 1999. This is basically the overvaluation across the board, all stocks. That's the overvaluation. And then I'm going to skip this next part, but then he goes on, he says, the most important and simple insight here is, he said, depressions follow bubble booms. Long recessions like 1970s follow normal booms like 1942 through 1968. I am expecting, this is the economist going on saying, I am expecting a 3-year depression. I don't like hearing that, folks. I don't like hearing that. I am expecting a 3-year depression from 2025 to 2027 and maybe longer. And he said, only in an era where central banks and governments create the first totally artificial bubble, because this will be the first artificial bubble ever in history that pops, we will see how they try to minimize the depression. So let me pause there, and I'm going to go on to the next thing because I want to talk about the narrow market. We've gotten very complacent, because I think a lot of folks literally think that if the market goes down, like during the pandemic and any other time, the Fed kicks in and they start the printing presses and they go into monetary policy, which indeed they will. And Donald Trump and the Trump administration will throw everything at it that they can. They'll move government money saved from Doge. They'll buy bonds. They'll try to control the markets. But unfortunately, when this one goes, essentially every economist I follow, every one of them is saying the exact same thing. There will be no saving it. And it will be healthy to just allow it to run its course, because there's so much shit in the markets. Like when the tide goes out, you see all sorts of stuff you never knew was under the water. That's what's happening right now. A lot of things are coming up. A lot of things are being exposed. A lot of things are literally coming into the limelight that have been buried, and none of them are good. All I can tell you, folks, is you can listen to me. You can listen to Warren Buffett. You can listen to Ray Dalio. You can listen to Harry Dent, Jim Rickards. You can listen to any of them. They're all saying the same thing. The smart money is resounding, or is a resounding notification that the markets are going to tank. If you think this isn't going to happen, then you are one of those stupid monies. I don't mean to put it any other way. If you think the markets are just going to keep going up just because Trump's in office and everything's going to be good, you're right, but you're wrong. It must go down before it goes up. The tariffs, all the stuff going on with Doge, it's going to drive the economy down, but then it's going to be solid. So here's the good news. And I'm going to be doing a lot of stuff, okay, in MSTV, literally telling all of you the specifics of what you should be doing. Not getting into that today. I'm literally just giving you the warnings that I'm getting from all these economists on what you need to be doing. You need to be getting defensive. You need to be getting really freaking defensive with your money. Stop thinking, oh, well, I'm going to stay in NVIDIA and I'm going to make more money. The juice is not worth the squeeze right now. No ifs, ands, or buts about it. And not only that, like Warren Buffett would say this is the best time ever to sit on the sidelines. Like literally since, I don't even know what the other period of time, let's say late 80s, early 90s. This is the best freaking time to sit on the sidelines because you're actually getting paid. Treasury bills, treasury bonds are paying 4s, maybe even 5% if you can find them. You can get fixed guaranteed annuities that are paying over 5%. You can put your money in like our PMC Wealth Cash Management Program. You know what we pay? 4% on cash, FDIC insured. And you can get your accounts guaranteed by the FDIC up to $10 million because it's a conglomerate of 1,000+ banks. So instead of that 250,000 thing, no, $10 million per person. So 20 million for a family. And we do all that, just cash management. So it is an awesome time to sit on the sidelines because you actually get paid. You weren't getting paid the last couple of years. You were pretty much getting zero on your savings. And if you're still getting zero on your savings, let's set up a call soon because you shouldn't be just getting that. You should be getting 4%. It's just a lot of work to find that. You should anywhere between 3 and 4% is what you should be getting on cash in the bank. And if you're not, you're just not doing the homework. So let me move on. One more thing, and then I got to talk real estate, Stephen. You're going to like the real estate one, but you're actually going to hate it. So this is another economist and very renowned trader. He's a stock picker, okay? Unbound Wealth is the name of it, and it says how to beat lower future returns. So he's talking here about the outperformance of the index, and he's talking about the narrow market. So I've got a couple things highlighted, and this isn't technical and this isn't difficult, but what he's talking about is stocks that have outperformed the S&P 500. And he's talked about how difficult it's been to beat the S&P 500. But he's also talking about how the S&P 500 is so narrow now. You're not looking at 500 stocks, although the S&P is 500 stocks. You're literally looking at 8 to 10 stocks. So that's the narrowing that he's talking about. And it is not a good thing. It's right in line with that concentration. But what he's essentially saying is when you look at any other period of time in history, and he's got them all outlined. And he's looking at the confidence in the market. And he's also looking at the narrowing of the market. This right here, and I don't know if you can see this, it might be hard to see. That's the confidence in the market right now. Ever since Trump took office, this is what the masses are saying. They are so confident that the markets are going to just keep going up. They are so confident that stock prices are going to increase that it has literally created this false reality. Literally, that's what it is. It's a completely risky bet. And that's what he says. He said they ramp up their money. He says, why are people so overly confident that, and when they ramp up the risky bets, and they're always, and he didn't say sometimes, he said always the ones that lose the most money, the dumb money. It's the dumb money. That's what essentially what he's talking about. And I'm going to finish with this article. We're going to go on to real estate. He said, over time, the masses are wrong. Always. You can read it. Always. He said, every single time, the masses are wrong. He said the top 10 companies in the S&P 500 account for over 40% of the index's weight. That's like the first time in history that's happened, folks. You have literally 10 stocks. That's all that matter in the S&P 500. You take those 10 stocks out and you don't want to see the returns of the S&P 500. Those returns you've seen on your 401k for being in the index, they don't exist without those 10 stocks. And those 10 stocks or 8 really is what it is. I did YouTube videos. If any of you want to watch a lot deeper on this, go to my YouTube channel at the Chris Naugle, and it really, really dives into that. I don't want to bore you with any more of this stuff, but basically you've got a narrowing of the market. You've got the economists all saying, get the F out. And now I'm going to bring this sucker home. I know we're a couple minutes over, but we started a few minutes late. I'm going to go quick with this, but I want you all to read this screen. Y'all remember 2008? You remember the housing crash? You remember why the housing crash happened? Do you remember watching The Big Short and all those different movies about that? Well, right here, your home value is at risk. So this is another economist, Sean Ring. Okay, he's saying, I always say equity people are happy because they get lucky. He said fixed income people are perpetually miserable, like bond people. But what he's talking about is he's talking about the same exact thing that happened in 2006 and 2007, the risky loans that were being done, the FHA, which is the Federal Housing Administration, which is a U.S. government agency that was started in 1934. But when we come down here, they're talking about what the FHA is and how the FHA they're not like a lender, but they're basically just insure loans. So banks can go out there and take riskier loans because they've got the FHA backing them with insurance. So now, just so you all know, and just I want to preface, because I don't want to read this whole thing in the time we have. This is exactly what happened in 2006 and 7. You thought that was done. We all thought that was done. We thought we got smarter. We thought we learned from our mistakes of 2006 and 7, because the Great Recession almost took the entire financial system down. It took the whole world down. If you're not paying attention, it took the whole world down. And you would think we wouldn't be doing the same things again, but here we are, doing the exact same thing, 3.5% down. You got home ownership being more accessible. They're literally, look at this. Here's the subprime bubble, okay? I just want you to look at this. Look at where we're at. Look at where we're at right now. The ratios. So this is an important one. Deja vu, he calls it. In 2007, just before the financial meltdown, only about 35% of FHA borrowers had a debt-to-income ratio above 43. What is it today? Well, we all know everybody's in debt today. So here's today. That number is nearly doubled. It's 64%. Now, me being a lender, I lend money from my infinite banking policies. Me being a lender, I would never lend money to anybody like this. Who would? You'd be an absolute fucking idiot to lend money that has a debt-to-income ratio of 64%. Think about that. Just let that sink in. But they're doing it. They're doing the exact same thing they were doing, and the government is literally just lending or insuring all these bad loans, and no bad mortgages left behind. And listen, a lot of this, I don't mean to keep giving Biden a black eye, but a lot of this happened during Biden's administration. And it talks it out right here. The relief programs that came about during the pandemic essentially opened the floodgates for giving people loans that certainly do not qualify for loans. Did you know that the FHA, you can get a mortgage on a house with a credit score of around 500? Do you know that if you have a credit score of 500, you literally don't pay your bills? Do you understand that? Like if somebody has a credit score of 500 or 600, like they're not a good risk. I'm sorry. I don't mean to call anybody out because I'm not, but like if that's your credit score, dude, you got a little bit of work to do. You know, you got to literally figure out like, what did you fuck up on to get that kind of a credit score? Because they don't just happen. It's not fixed. It's not, oh, the system's out to beat me. No, it's you messed up, man. You messed up. Something happened and you really messed up and you got to fix that. But, oh, no, you don't have to fix that. You can still buy a house. Yeah. You don't need a very good credit score. You can just go buy a house and you only put 3.5% down and, oh, they'll give it to you. Yeah, the FHA will back it up. We're doing the same things we did that landed us in the Great Recession. We're doing them all over again, folks. So then he says, what happens next? Right here, the U.S. housing market is propped up by artificially low rates, government-backed loans, past presidential administrations willing to spend money on symptoms instead of fixing the root problem. The question isn't another mortgage crisis is coming. It's when. I didn't mean to end on such a bad note, but like that should really ring home. For any of you that are old enough to have lived through the Great Recession, I said, I never want to go through this period of time again. I was a financial advisor. I don't ever want to go through this period of time again in my life. And here we are doing the same shit again. Same shit. Unreal. That's all I have to say about that. I'm done.
Well, that's a good rant to end things for today. A lot of stories we didn't quite get to, some funny stuff, some crazy stuff. Jake Tapper coming out with a book called Original Sin, President Biden's Decline, Its Cover-Up, and His Disastrous choice to run again. Keep in mind, Jake Tapper was one of the biggest purveyors of defending Biden, that he had no mental decline and he was perfectly okay. So just to watch these journalists like just completely lie for years and then try and profit off it with a book is absolutely pathetic. Another absolutely pathetic story. The ex-FDA director, the director of the FDA, of course, that approves things like vaccines, was just named the new chief medical officer at Pfizer with a nice multi-million-dollar salary. So continuing to see just the complete corruption in the medical industry. And the list goes on and on and on. But we'll be back here throughout this week, coming up with more stories. We'll get them ready for you. We'll bring them back here next Wednesday at 9:30 a.m. And this was a good show today, Chris. I think
yeah, real good. I didn't talk about the eggs. I had a whole thing prepared for eggs and all that other stuff.
So
but that'll happen next week. So, folks, just take what you just learned. Go out there. Some people are saying that. So now might be a good time to get a HELOC. Yeah, now would be a good time to hurry your butt up and get the HELOC. So I love the comments. They're great. Go out there, make things happen, do good, and we'll see you this afternoon for the Wealth webinar. Happens at 1 p.m. Eastern. Join us. We've got an awesome topic of, well, I'm not even going to tell you what. You're going to love it. We'll see you then. Thanks, everybody, for joining us for another episode of What the F Happened.